just put this for a moment. So welcome to our next webinar. Yeah, I try to make those webinars now a weekly thing. I think this should be doable. I think to check in at least once a week is good and should provide plenty of opportunity to chat and to catch up, to answer questions as well. So yeah, I will try to make it a weekly thing. Hope for those who cannot attend live, you have a time to or a chance to watch the recordings. Again, if you cannot attend live, send in your questions before, and I'm very happy to answer them during the webinar. So we have two questions that were sent in before, I think. The first one from Gato Trading. He's living in Brussels, and he can be online after 5 p.m. So this would be roughly, New York session time, or early in the morning, couple of hours before London. So he could be trading probably the US pairs a little bit, or maybe the London Open. What's the best approach to follow for those who work and cannot follow the markets during the day? So yeah, you have quite some opportunities and ways to structure your trading. So you could, for example, trade an open. I'm not sure if you said before the London Open. I'm not sure if you can maybe trade the open. If not, if you cannot trade the open, there's not as much activity before the London Open, at least for the European pairs. You could be trying to trade the Asian session, since you said a couple of hours. So this would give you maybe a few hours in the Asian session. You could have some movements if you want to trade the lower time frames as a day trader actively. Or also one thing, by the way, to keep in mind, if you have a day job afterwards, actively day trading for a couple of hours can be quite energy draining. So if you feel that trading is taking away too much of your energy and your focus and draining you, and your performance in your job suffers, that might not be the optimal way. That's something to keep in mind. Otherwise, you could trade a little bit of a higher time frames, maybe 1 hour, 4 hour, and have a set and forget approach. So there are definitely ways how you can do that. I had a trader in the past who wanted to be a day trader, but his job was also interfering. And then what he did is eventually he had 2 days per week where he was working from home, and then he talked to his boss to ask for time that he could devote to his trading. So there were a few, maybe 2 or 3 hours twice a week where he could actively day trade the London Open. So if you want to be a day trader, you didn't say what you want to trade, but assuming you want to be a day trader and you want to trade the lower time frames, then try to squeeze in a couple of hours before London Open, and then you will find some markets. If you want to trade the higher time frames, then yeah, but you didn't mention the higher time frames too much. But there should be some options and opportunities. The most important thing is that you're quite structured in your way, and you're very certain and rigid about when you sit down to do your chart analyses, and you have a plan. But definitely it's doable a few hours before London Open trading the US session, or you can check 5 p.m. and then trade the end, the mid or the end of the New York session. Could be also an option. So I hope that helps, Gato. If not, then let me know, and I'm happy to provide a follow-up. This is a question that came up, I think, 2 or 3 times. What do you think about following the dollar index as a reference for us focusing on the US dollar pairs? And then Michael asked, what about following the futures, British pound future, for example, Japanese yen future? There's definitely, some people do that. I personally don't do it. I did look into it in the past. It never really worked for me. I didn't find that looking at the dollar index gave me anything that I needed to know, and I didn't see from looking at the euro, US dollar, or any other US dollar related pair. For me personally, I didn't find value. I didn't find the index or the future gives you any information that I was missing from the regular price chart. If you find a way, then of course you can do that. What I find more interesting to look at a currency strength meter. So looking at currency strength in relation to each other, that might be a much more effective filter, especially for short-term day trading, and looking and using as a filter. Personally, I've never found a way to make dollar index work for me, but yeah, just my opinion and my experience because you asked me. All right. So now what I do during the webinars is that we are going through charts. We can go through charts that I have marked. We can take a look at charts that you are interested. I'm always more interested in hearing what you want to look at. You have questions on, so I can provide direct feedback and maybe shed some light. Excuse me for, I'm not sure how to say your name, Masiesh. How do you see the ES chart past days? What time frame are you looking at? So you want to look at the S&P 500 or just the E-mini future? Weekly, okay, cool. So let's make it a top down, right? So there was another question I saw it earlier in the Discord about what wave are we in regarding Elliott wave, and I don't, so what I saw was here that we are, you could say, in a kind of a completed five-wave count, 1, 2, 3, 4, 5. And after that, we are more in a congestion, right? More of a kind of like a flat top triangle. The price action is really coming closer together. Hard to say. I think there are other indices that are way more interesting. But yeah, let's stay here for now. Sorry, yes. So this is the weekly. I don't see much. At least on the broad scale, what you can see here is we have deceleration, acceleration, right? We're coming from strong bullish momentum, then the candles are getting smaller, and now, of course, this week is only halfway done, but we see some bearish acceleration to the downside, which will also be present on the lower time frame. We are here at the top range. On a daily time frame, yeah, we can see it already kind of. You can see, right? The very, very subtle head and shoulders. We see here also that the market tested and rejected the weekly central pivot point as resistance, which is quite interesting. There is here this support level that we tested, tested with the lower bounce and then eventually broke below. Quite interesting. Yeah, for now, well, where are we now? We are right here, 4,100, pretty much round number. We have the wicks to the downside. The market is probing and pushing. This is today's Wednesday. This is the daily pivot point, which is holding for now. Has resistance, also an interesting development. But yeah, you can see the next leg down would only happen probably if we break below this 4,100. Quite a big rod number, quite a big level also in the past. So right now, it kind of feels that the market is rolling over here at the top of this range. Overall, it still looks a little bit, well, when we just consider the lows, you can see the price is still kind of making higher lows, but we are in this range market, slightly sloping up. What we could be seeing is something like that, right? It's an opportunity, it's a possibility. Hard to tell. Yesterday, big engulfing candle that brought the market down here, so quite the bearish signal. For now, today, obviously, you can see we have the wick. We are struggling here at the previous low, so kind of, well, long term, you could say, okay, we have this slightly bullish slope here, but maybe we are at the beginning of the next downwards leg, maybe into the trend line, who knows. There is also some level here in the middle of the range. Here's the 4,000, very big round number. On the lower time frame, I would. So what are you gonna do? You're gonna buy now. Buying now, you have this right in front of you. Not a lot of room to the upside. I would actually quite like if the market would get below 4,100, then you actually have some room here to the trend line. That would make a little bit more sense, or at least from a reward to risk ratio perspective. We have the 4-hour engulfing pin bar building currently, so that's kind of a bullish signal, but this is a strong level, and this was kind of expected, and not, yeah, it doesn't come out of nowhere. But you can see the market is in this long-term distribution here after a run here from the lows of the trend line. But seems like the market is doing that. We hit the resistance, we have the distribution, we hit the low of the trend line, we have this accumulation. Yeah, we need to clear the distribution. If we are looking for shorts, we have to get below 4,100. Otherwise, we will be stuck here for a little bit more in this range. But yeah, tight spot, but definitely interesting. And yeah, other markets are also showing quite interesting patterns here. The NASDAQ, you have this big level here, right? Looks like the market tried to break out here yesterday. Could be a break and retest, but you can see we already gapped up here. That's the open of today. We gapped up. Which one did I look at earlier? Dollar index, Dow Jones Industrial, sorry. Also quite interesting pattern here. We have here the lower high sloping. Kind of a support. You can see we retested yesterday, or very early on here, the daily pivot, sorry. Could be a break and retest. Big level here. Quite an interesting scenarios here on some of the other indices as well. The DAX are still here trapped in this accumulation or distribution similar to the S&P. So yeah, quite an interesting scenario for a lot of those indices. They're just at those transitioning points and those transitioning phases. Hanaporn. Maybe this question is similar to the previous question. When you look for a trade, is there any relationship between two pairs, or every pair can be traded independently? For example, if I want to sell Aussie CAD, but when we look at the CAD yen, we see it likely has a selling bias too. Yeah, so I guess you are talking about correlations, and there's definitely correlations in TradingView. There's this nice indicator, which is called, just if you type in correlations. And what was the example? I think CAD Swiss, right? And then we go to Aussie CAD, and then you can see if we go to a higher time frame. Okay, where did it go? So we type in correlation, and then you want to see CAD Swiss against the Aussie CAD. Okay, here we go. Yeah, you can see there's definitely correlation. In this case, it's not a real, there's no correlation because it's at 0, but there are definitely times when here there's almost perfect negative correlation. Yeah. And obviously in other markets, for example, if we go to the Aussie US dollar, and then, for example, check the Euro US dollar, there is definitely correlation. The way I use it in my trading is just for risk management purposes. So if I see, for example, I have two buying setups on very positively correlated markets, such as here we have the Aussie and the Euro US dollar, then I will take this into consideration when I do my position sizing. I would, if I have Euro US dollar and Aussie US dollar long positions or trade signals, I would scale back my individual position for each of the markets so that I don't have increased risk, because yeah, when you have positive correlation, the markets move very similar. And then if you are in a buying position, you have the high risk that instead of seemingly having two trades, independent trades, you actually just have one bigger position. So I don't use it any other way for signal finding. I don't look, is the Aussie going down? Does it mean the Euro will go down as well? I don't use it in that way. I use it purely for risk management purposes. Yeah, I hope that makes sense, and that's what you were after. KT, let's do that. I have also a few other markets marked, so we can take a look at them. If you have any other pairs that you would like to take a look at, very, very happy to do that. British pound yen, 166, but then see the drop. Okay, cool. Let's do that. British pound yen. What time frame did you trade? Let's just start here. So yeah, there was this big engulfing candle, which I think we're seeing on the euro yen as well. Big engulfing daily candle right at the previous high, but you can see there is this level that I've marked. Yeah, well, 166, which you're aware of. You went long. So you were on the right track. I would not sell until we really break the low. So, yeah, I remember you posted this. Yeah, I think it was something like that, right? Here we had the break and retest, the structure. Yeah, nice break and retest. Okay, so you saw this one, I guess. Yeah, it doesn't look like smooth sailing. Well, I wouldn't blame you exiting when you see that move against you, especially after what has happened previously, that the market was not really that strong. You expect to see the market roll over, and then after the break and retest here, the break and then the retest, you expect the market to rally, which it did not. It really struggled, right? There was a big struggle here. Then you have one candle that pushes higher, and then you can see this prolonged sell-off against you. I definitely would not blame you. What you could be doing is, instead of fully exiting the position, the problem is that here the market closed kind of below the breakout level, so that's a very bearish signal. If, for example, the market wouldn't have closed fully underneath the breakout level, but assuming that this is your breakout area, this is your breakout level, and then the market would have closed a little bit here above it or right at it, I would personally probably just have scaled out maybe half of the position, maybe 25%, maybe 33, something like that, not a full position, and then see what is the market going to do. Does it recover? Or does it close below the breakout level? If it would have closed below the breakout level, okay, I don't blame you for closing the full position, especially since everything doesn't look too bullish. Also, the higher time frame with the big engulfing candle could be quite a bearish signal, but I think overall, sorry, don't blame you for closing the position. Yeah, a lot of things that don't look quite bullish here. So yeah, I think overall, fair play. As long as the market doesn't break a breakout level again and doesn't close below it, I would still remain more bullish. But yeah, in this case, if you see the market does break here, then I would be out as well. But yeah, overall, yeah, I think you did well. Since you're trading against the higher time frame here, I would also be a little bit more cautious with my trade management and not push my luck too much. If you trade with the higher time frame, you can be a little bit more aggressive, but here you're going against the higher time frame engulfing candle. So yeah, overall fair play, I think. I don't think there's too much that you do better. I hope my explanation helped and shed some light. Please do you advise using trade managers like Magic Keys? So I never used any physical tools. There are for MT4, I know there are, I don't know how do you call them. There are just scripts where you can automate a lot of those position sizing calculations, and yeah, that type of stuff. I've never used any physical ones. So I have no real experience. Let's just wait for KT10, maybe because we just covered his chart, and then I will continue. Okay, cool. Could you show how to add the indicators? Yes, okay. I will show it. I think I explained it in the course, but I can show it. It's quite simple. So let me add the weekly pivot. So under indicators, you just type in pivot, and then it's called pivot point standard. Once you have done that, you just go to the settings here on the top left, and then under the settings, what I do is I deactivate all the S and the R levels. And then you are left with the P, which is the central one. I make it black, make it a little bit thicker. And then here under pivot time frame, you can either choose to be it as the daily or the weekly. And that's it. Now you have the weekly central pivot point on your charts. Very quick and easy. So it's just called pivot point standard. If there's a contradiction between 2 to 3 times frame, should we avoid the trade? Like in the daily and 4 hour, it has a buying bias, but in the 1 hour, it has a selling bias. Sometimes it makes me confused. No, you don't have, well, obviously you can you can do whatever your trading plan says, but as I've shown you here, I think this is a great example. Here we had, this is the yesterday candle here, right? The big engulfing candle, yesterday, very bearish signal. But then on the lower time frame, you have here this reversal pattern, right? You have this big trend, which is the daily engulfing candle. Then you have the higher lows. You maybe can make a case for a breakout. You have the round number here, 1660. So round number, you have the break and the retest, and then this could be your bullish signal. So what happens is that your daily time frame is kind of more, well, it's not super bearish because you still have higher highs and higher lows, right? The market has been moving higher for the last 4 weeks, but the last daily candle is an engulfing candle, a bearish one at a resistance. That's kind of more bearish, at least short term, than bullish. So you have to keep that in mind. The lower time frame here in this case could have a nice break and retest pattern, long mature trend on the lower time frame. Then we have higher lows, break and retest could be a bullish signal. So you can see that daily slightly more bearish than bullish, I would say. Lower time frame more bullish than bearish, and you don't have to skip those trades. But as I said, you have to be a little bit more cautious with your trade management. If the lower time frame doesn't agree with the higher time frame, then I would be way more aggressive with my trade management. If I see signs that the market is not agreeing, maybe you see that you also have a double top here. In this case, you don't, but let's assume the market moves higher and then gives you this double top and fails. I would be way more cautious to close my position. Also, when the market moves against me, I would try to protect my trade and close it earlier than I would, for example, if I'm trading with the trend. Maybe then I would wait for a dirty retest and also accept that. Whereas trading against the higher time frame, I would be way more cautious and aggressive. You don't have to completely avoid the trades. Not always, and most of the time, it's very hard to align the different time frames. It's not going to happen a lot. So you have to be very patient and very selective to align different time frames. But if you still think that there is enough reasons to get you into a trade, that the trade idea looks overall quite good, then you don't have to necessarily skip it, but be aware that the lower time frame might not agree with the higher time frame. The price might not travel as easily, and therefore you can manage it aggressively. Maybe also be a little bit more, or reduce your position sizing a little bit more. Can you offer your views on the US dollar yen? I shorted last night on a demo with a target above support. All right, let's do that. What time frame are you on? It's always helpful to know the time frame. All right. 4 hour, okay. So we are definitely moving higher. At least in the short term. When we look at the long term, we see we have this down. Could be maybe exhaustion. And we have a trend line we have to check. But you can see, yeah, we have this rolling over. We have deceleration. We have a little bit more bearishness here on the left, on the right. What is the reason for shorting? Do you have, is there a level, a pattern that you're looking at? I don't see too much. You can also always share your screenshot right here. Click on the camera in the top left and then copy the link, or just copy image and then paste it in the chat. Okay, fair enough. Thank you. Okay, so you shot it here. Yeah, you typically don't use downward. Yeah, okay, fair, yeah. So you trade right into the trend line. You trade right into the cluster that you drew, right? You have the trend line, you have the long-term trend line, you have the last support, all of them meet, and then you still shorted into it. This is not 3-to-1, right? 1.3. So yeah, 1.3 to 1 is quite, because you need a 40% win rate to make this work. And you have a lot of negative confluence against you. Yeah, I would be totally scared. You already drew all of this and then you still trade into this. And now you have the deceleration, acceleration. Yeah, that's kind of, yeah. Where's the weekly pivot? Okay, we are under the weekly pivot. That's one thing you have going for you. Yeah, I'm not sure about this. You have a lot of wicks here to the downside, a lot of rejections. None of the wicks was covered. So you can see, I don't mind wicks at all. I don't see them as a problem, but if the wicks don't get covered, then this is a problem. Like here you have a wick, it doesn't get covered with the next candle, and then you can see of the reversal. If wicks stand out and then they get covered, that's a momentum signal, but this is kind of a rejection signal. Yeah, I'm not a big fan of this one. There's just so much coming together. You drew it all on your chart and you still jumped right into it. Yeah. This didn't scare you? This would have scared me probably. And then with the low reward to risk ratio on top of it is quite worrying. If you would go for a higher reward to risk ratio, maybe it would add a little bit more of a positive confluence to have a higher reward to risk ratio. But here, I'm not sure. It feels like you're trading kind of in the middle of a range market, right? We are here in this range. Yeah, so much coming together here. So personally, I don't see enough positive confluence here to justify it. Maybe if we get below it and then trade the retest, maybe that would have been a choice, but still I don't see too much here. Okay, that's good. Could you please look at US oil? I just sold because it reached the daily resistance and retest the weekly pivot. And the 50 on the 12. All right, let's take a look. I can see the head and shoulders. The pivot point retest happened here, so it's already quite a while ago. If you want to trade the weekly pivot point retest, I would look when the market went into the pivot, and then maybe looked for a breakout out of this area here. Let's take a look. Let's take a look. Let's start on a higher time frame. Let's activate the weekly. And by the way, one thing I do is for the weekly pivot under visibility, I turn it off on my higher time frame, even on the daily, and I just look at it on the lower time frames, so it doesn't clutter the view. All right. We have the range where we bounced. Yeah. Here's a gap close that is quite important. A lot of people will be trading here or having this as a target. That's why you will see the bounce that you're seeing right now. Gaps, especially those large gaps, you can be sure that a lot of traders who were on the wrong side just waited for the market to get back to the range and then exit their position. That's why you're going to see a lot of momentum or volatility, at least, not momentum. Here's the pattern that you're seeing, right? Yeah. Here is the weekly pivot. Just out of interest, let's go to here. This is quite nicer. You could have traded maybe something on the lower time frame. You have the triple top, you have the breakout, then you have the break and retest here on the daily pivot as well. So you retest. First, you reject the weekly pivot as resistance, and then you also reject the daily pivot as resistance. You have here almost pretty much an engulfing candle, and then you break here into the previous low, which is nice. Quite some good context. Then you have here the flag. The flag breaks here, the breakout, and then yeah, this is the gap close. Oops. The gap close. Yeah, you can see as soon as the market hits the low here, the gap close, you see quite some volatility, right? Yeah, I would be a little bit cautious trading beyond gap close, especially those big gaps on the daily. They don't happen often, but yeah, the more extreme they are, the more people are probably going to see them as well. It's no secret that there's this gap waiting. So I'm not sure how realistic it is to see more downside here for now. If the market finds resistance and doesn't break above this area, I would feel quite comfortable. If we get back above here, if we don't retest previous support as resistance, and if this doesn't hold the 77, I would be quite worried about my short position. Yeah, you have your stop at 80, 78. Okay, so all the way up here, it's okay. Yeah, so you have some room. All right, what's your reward to risk ratio? Looks quite healthy. Probably like a 2.5 to 1, huh? Maybe almost 3 to 1. Yeah. Yeah, you see exactly where you expect the market to bounce. It's where it's bounced, and now it's kind of in the middle of nowhere where you don't want to see it. So tough call. 2 to 1, yeah. I think your idea was quite interesting. Maybe the target was a little bit off because you bet on a push beyond the gap. Also, if you are interested in trading pivot point retests, then maybe looking at pivot point retests a little bit more early when they happen could be also an idea. but I think you are on the right track. Yeah, I think that's a pretty decent idea. Overall, the bearish does look bearish. The bias does look bearish, but yeah, I would not be too aggressive trading against this one. But overall, interesting trade idea. I think you found the bearish bias quite correctly. Yeah, will be interesting to see if the market can find enough bearish momentum here. Yep, that's what we're here for. Just keep asking questions, and I'm very happy to answer and to analyze your charts. Prof, yes, I usually do share the trades that I've taken. Unfortunately, due to a death in my family, I was not able to be at the computer for the last 2 weeks, so there was no trading for me. Yeah. So, but when I hopefully next week have a better state of mind, I'll be back at the charts, and then also in the webinars, ready to share the trades that I am taking with the analyses and a breakdown. Yeah, we did it in the past in the webinars, and I'm definitely going to continue it. That's all right. Thank you. Yeah, that's okay. Thank you, guys. All right. So we have a few other markets that maybe you want to look at. If you have other charts, pairs that you want to look at, let me know. What should be the top-down analysis for a trade which can roughly go for 2, 3, 4 days? Yeah, I think, well, on executing a trade on the 1 hour and then holding it for 4 days, that might be a little bit long. Yeah, daily 2 hour, I think, is a good range, probably for 2 to 3 days. Yeah, I would definitely, if you are looking for this type of time horizon, start analysis on the daily time frame. If you get a good signal on a daily time frame, a good candlestick in the right trend context, I think this makes a lot of sense, because let's assume you have the daily candle, an engulfing candle, and then you can expect, if the other conditions also line up, to see the follow through signal for the next 2 candles on a daily chart. And then you time your entry or on the lower 2 hour. You could also do daily and 15-minute. The daily time frame is in general a very, very good time frame to have as your overall reference point. You don't necessarily have to look at the whole trend context. What is the uptrend? What is the downtrend on the daily time frame? Other traders just look for, and what I like to do is look for candlestick signals, such as large momentum signals, rejections. Also, what is interesting to look at, large or important high impact support and resistance levels, supply and demand areas, find them on the higher time frame, and then or even the weekly pivot point, and then go to the lower time frame to look for a trade around those key points. But you can go even lower and go to the 15-minute. Obviously, if you go to the 15-minute, your trade will typically not last for 3 to 4 days. For the most part, obviously, there can always be exceptions, and it also depends highly on your reward to risk ratio. But yeah, daily, I would always incorporate into most of my analyses. You don't have to look back far into the past on the daily time frame, just what has happened recently. look for the big levels, mark the big levels on your higher time frame. Yeah, and then I think that makes a lot of sense. How many points of confluence do I look for? So in the course, there is also a module about strategy design and about strategies in general. And what I typically recommend is to have 2 or 3 confluence factors from your higher time frame, and then 2 to 3 confluence factors from your lower time frame. There's no hard rule. What happens is the more you have, the more confluence factors you require, the fewer trades you will find. Obviously, because each confluence factor that you add as a requirement will filter out more possible chart situations. Too few confluence factors and you are usually not selective enough and you don't have enough filter criteria. So I guess 2 to 3 higher time frame, 2 to 3 lower time frame, in that area, that's usually where you will find most of the strategies. Roughly be, of course, it's a spectrum, but that gives you a good starting point. And then once you go to the course and do the strategy development, things will get clearer, I think. Also, when we do the backtesting in the course, I think it makes a lot of sense. If you're interested in that, you're going to learn quite a bit. And also the strategy modules where I talk about the individual strategies, you're going to learn about confluence. But yeah, just be aware that the more you have, the fewer trades you will have. More is not always better in that regard. I saw someone talking about CAD Swiss. The CAD Swiss broke this huge resistance. I'm not a big fan of shorting. No, the trader went long, I think, right? Maybe I'm not sure if there's someone that is in here who talked about it. Someone talked about going long early today when we didn't have this candle formed. I don't think it makes too much sense, especially when you see the market just breaking such an area. I would be very cautious going against that, because especially right after those big levels have been broken and have been broken with strong momentum, typically what you see is at least a little bit of a follow through. You don't want to be too aggressive on those reversals. You can see the market has been going down and down a lot. Give it some time. Don't be too aggressive going against the market or going against the trend, especially if you see the market has just cleared big levels. I would be very, very cautious here. You can see the market is still very well below the weekly pivot point. So not very bullish signal. Maybe in 1 or 2 days, when we get today, maybe a good pin bar, and then maybe tomorrow we get another bullish candle. So we have deceleration, then acceleration. Then we could start thinking about going long, but I think it's a little bit premature. You also see on the lower time frame, we only have lower lows and lower highs. Here we have a pretty good resistance level that we can work with. At least you want to see the market break some above that, be above the daily pivot point. You can see the market is just still making lower pivot points as well, which will maybe change tomorrow. Probably not with this push, well, maybe. But you don't want to be too aggressive in going against the daily chart. I think this is in general a very good idea, even because Moritz is a day trader, even going to the 1 minute chart, but he still also considers the daily time frame for his overall sense of direction. So yeah, I'm not sure who said it, but be aware of going against the daily chart. Here, for example, we talked about this, I think, last week. The market cleared those levels. There were already people starting to think about shorting the market, but there was no point. The market kept making higher lows. You can see we break here. The high, we take out the high, we break it. And now you can see we have a very, very nice follow through. Go with the trend, go with a higher time frame. That's the best advice I can give you. Look for those big levels. And then when they are broken, try to look for trend continuations. That's usually where you find quite interesting trading opportunities, even round numbers. When a round number has been broken in the trend overall, look for continuations. I've been guilty of that in my trading in the beginning. I think it comes natural to be a contrarian trader. If you see, or to have a contrarian mindset, the market has been going up, maybe you have missed it, and then you believe and you tell yourself that it has to go down eventually. It can't keep going forever. Maybe you feel that you are a little bit late in the trend, but a very helpful thought to keep in mind is that the trend is usually going to continue. Don't fight it unless there is a very, very strong signal and a very valid and obvious signal that the trend is losing strength. But go with the trend. That it's going to save you a lot of headaches as well. Don't try to always call a top. Go with the momentum. That will make your life so much easier. Yep. EuroCAD, I marked this as a very, very interesting area here. Around 51. We are reaching it now, still quite bullish. I would love to see the market get above it and then maybe trade a small continuation. Here as well, Euro-US dollar at a very, very interesting point. Could look like a cup and handle, right? If we get above this one, 111, I would go to a lower time frame and then start looking for, maybe not the 15 in this case, but I would start looking for break and retests out of this area. Continuations into the long direction. But for now, I'm just observing how is the market reacting to 111. Very, very big. You can see the market still making higher lows. Of course, if the market breaks to the downside, yesterday we already had an engulfing candle and maybe today a fake out, then my bias might change to more bearish. But as long as we don't have very clear bearish signs, I will remain overall bullish and not look for shorts. But I think it's a very good practice to always start your analysis on the higher time frame. I think I keep saying it in the course as well. You always do top down. You never do bottom up analyses. You always start on the higher time frame and never on the lower time frame. And that's how you build your bias. It will keep you open-minded as well. Yeah. Any other charts that you would like to take a look at? Any other questions maybe? Don't have to be related to charts, but hopefully related to trading. Maybe anything that came up during the course. I'm very happy to answer your questions. By the way, today we are a little bit, a few more people, which is good. So it seems like the later times are suiting more people, which is great. For those in the Zoom who maybe are not aware, we are using the Discord chat to chat during the webinars. So just come into Discord if you have questions. Typically, I make the webinars go for an hour. If there are no questions, obviously, I'm not going to waste your time. If in the future, or when in the future, maybe hopefully next week, I'm back to regular trading again. I will share my trades as well. Okay, yeah, just take your time. I know in the beginning, the course is, it has a lot of content, so just make your way through it slowly, but steadily. I will always be here when questions come up. Even during the week, you can always jump into the questions channel and ask your questions. I'm always happy to help out whenever something comes up. I think that's the best way to learn, and also the way to teach. I've done a few of those mentoring sessions, and everything that I've learned in the last mentoring groups is now included here in the new Trade Academy. So yeah, I hope this is going to be the most effective one. And yeah, I'm always here whenever you have questions. The question chat is always open. Yeah, I'm very, very happy to always help out. And you can be very certain that if you have a question, then there are other traders who have very similar questions as well. Yes, the concepts in the course are very universal. Obviously, stocks just have trends like any other markets. Momentum is a big component. how markets trade around support and resistance levels, which is basically the core concept of chart pattern trading is universal. So yeah, many of those concepts will also apply to stocks as well. Yeah, totally. That's cool. I'm glad to hear. Yeah, it took me, I think, over 1.5 years to put the current state of the videos together. US dollar, gold. Yeah, I think you said sell bias. Yeah, I would say also cautiously bullish. The market is at this 2000 price level now for a month already. We can see early signs that maybe, but this could change so much. As long as this support level holds, I would be very, very cautious here, because what we have for now is just higher lows. Very, very important. We need to have a really, really clear break of this area here, and until then, I will not touch this on the short side. We're seeing a change in the pivot structure, but yeah, as long as this doesn't break, I would be very cautious here. Yeah, but I'm sure you're aware of this level. I think everyone is watching this. There's this big level here above this. Yeah, very often you see actually that those big levels pull the market in. They really suck in the price often. Obviously not in this case for now. But yeah, we need to definitely see a very decisive push here underneath this one. Other than that, yeah, I think that's the, there's not much more that you can. For a bullish idea, I think you want to get back above 2010. There is some supply here, right here where this drop was initiated. So yeah, it could make sense maybe to look and then into the big level. But yeah, overall, very undecided, very undecided. Maybe if we're going to see more movements on the indices, gold will wake up as well. Let's see. But definitely a market that I'm looking at. Silver as well, I think it shares the same fate. The level here is also very clear. It's the previous resistance of this area, has become support, early signs of a head and shoulders. But as long as the market doesn't break it, yeah, we are still in this very strong uptrend, right? Yeah, definitely interesting, but a lot will probably also depend here on what the indices are going to do around those levels. Sure. And I want to remember, this is the webinars are all about you. I'm always happy to do whatever you request. Any questions that you have, you can think about it for the next webinars as well. If there's anything you have in mind, always bring your questions, bring your charts. I've always seen the people who ask the most, who try to get the questions out of their head, they're the ones who usually see the biggest progress as well. All right. So are we good, or any more questions? If not, I don't want to steal your time. But it seems like this time is a little bit better. We have more attendees than last week. So I will try to keep maybe this time for maybe a month or two. Let's see. I think once we have a regular time, then more people will be able to schedule it in effectively. Cool. Glad it's helpful. All right, then I would say this is it for the webinar. I will be always available in Discord. And then we will try to make this a thing every Wednesday around the same time, right? So thank you for your time. And we will meet again next week. Bye-bye. Have a good one, everyone.